Welcome back, Alejandro. I'm so excited to learn about Apple with you today, and I hope our audience will also enjoy. So feel free to take it away.
Hello, Michelle. Hello, everybody. As always, it's a pleasure. Today is a very special company because it's probably the favorite stock of our idol. So it's going to be very special. Um, Starting with that, I want to talk about how, to me, his investment in Apple was probably one of his greatest, if not the greatest, because I feel like many of his other investments, I mean, obviously Buffett, um, they had like bigger gains and percentage wise and just different things. But with Apple, you had everybody, all the coverage in the world, all the algorithms, everybody looking at it. And not many people saw the value that he saw. And again, he just shows how with the years he can keep learning. And it's funny because in that era he also bought the airlines. So they bought Apple and the airlines at the same time. And it's what um, Mr. Munger will always say, and it's like Warren just keeps learning and learning, and this is a life lesson that I feel is good to start with to talk about Apple. So what they do, I mean, it's pretty simple. I think most of us know the company designs, manufactures, and markets smartphones, personal computers, tablets, wearables, and accessories. They also have services such as advertising, Apple Care, cloud services, digital content, and payment services. And all of this is very important, but later on we're going to see the numbers, which, as I always say, is where you have to start understanding and not misreading companies, because many times we think, oh yeah, this company does this or that, but until you really dig into the numbers when you can really understand a company. And when I mean understand is because a lot of people use the phrase understand, and what does that even mean? What does understand mean? And from Buffett and Munger's teachings, understand means being able with an big certainty to predict how is this company going to look in 10 or 20 years. That is understanding to them, and that's understanding to us. This is a company that at the moment is the most valuable company in the world. So obviously, I mean, it has a lot of great things, and a lot of the things I'm going to show is going to be just a lot of numbers, but I think um, numbers is what helps us really dig and understand and have the framework in mind. Obviously, being so valuable, it doesn't mean it's a great investment because, again, as we always say, you have to look for great companies, but you have to pay the right price. And me personally, I'm a big fan of Apple, a big user. How about you, Michelle?
Oh yeah, same here. A lot of my phones are Apple, like my work phone and my personal phone, and uh, like yeah, it's been very reliable. I've never had to use a third party phone since 2011, so I've been pretty faithful to them, and I have used MacBooks. I still like using Windows more. I'm also uh, impressed though with a lot of the products and services that Apple can do that, they make it a lot easier to use a lot of modern apps and stuff. So, I mean, they're hard to beat. I mean, there's nothing other than their own, their own success that can hold them back. So they have to, always keep trying to outdo themselves in the future to keep up with people's expectations. But so far, they've been kind of living up to or exceeding expectations as far as I can tell.
Yeah, I totally agree with you. I think it's an amazing company, and they just keep exceeding people's expectations. So key characteristics that I think are, I mean, they're key things to make their big moat, and it's high switching cost. I mean, when you buy $1,000 iPhone, it's not like you can just go the next day and buy another iPhone. I mean, and then you just get used to it. It just how to use it. It just becomes like an extension of your body. It's just so important. It's become so important in everyday's lives. The network effects, the more people uses Apple, the better, obviously,
Oh
and
yeah.
bright like you will not believe. I mean, I just Here I have a funny story because many times I was like, why people like so much Apple, and then it's just sort of a magic thing to me. I don't know, and I have these two very good friends. Their names are Daniel Hurtado and Augusto Diaz, and they are really smart with money. And so one of them will probably drive, I don't know, 10 or 15 minutes to save a 10 cents in gas. The other one will just like plan on buying meat on Wednesdays because he knows it's 20% off, and that type of mind. But for some reason with Apple, I mean, they didn't care. I mean, if Apple was coming out, they will buy it. So
Wow.
that really helped me get into the inside of the power that Apple has on people's minds. And I think Buffett has talked a lot about that with similar things. I don't know if you recall with American Express that he talked to I don't remember the name of the his friend, but he was like that those products just become indispensable, and that's what Apple is. Mr. Buffett has also used an analogy very interesting about like if he have to give up the airplane or that phone, it will be a good thing. I mean,
Oh
he
yeah.
will not pick the airplane by far, which is something amazing. And he's done the same analogy with the car. So
Yeah, like I
that
think people are would rather sell their second car than give up their iPhone, right? So that just goes to show it has so much staying power, and it's hard to beat. Like people are all in the Apple ecosystem. Like they get the smartwatch and they get the AirPods, and the more that people stay in this ecosystem, the stickier it is. So, as far as I can tell, nobody has found a much better system alternative to Apple. So for the foreseeable future, they're going to continue to be dominant and always in people's mind share.
Yeah, I totally agree with what you said. I mean, it's just crazy that network effects that they have in people's mind, and I mean, they like you said, iPhone, and they get everything. So two important names that we don't want to forget with Apple is Mr. Jobs, which was the creator, the mind behind the design, the mind behind the being rebel, and just like I think he was the one who made a lot of people fall in love with Apple. But the funny story here is that when he died in '07, the company was only worth 300 million. And now the company, as of yesterday, I think is just above 3 trillion. So with Mr. Cook, he's the one who really has um, taken the market cap up. That doesn't mean he's the one who made Apple what it is. Obviously, I just feel it's a combination, but I feel many times Tim Cook is. I mean, it's not really people are not don't value how much he has done for the company because he may not be as creative and as design obsessive like Jobs used to be, but he is a excellent manager, an honest manager, a very smart guy. He allocates capital the right way, which I mean we're gonna see later on. But a lot of the capital, I mean, even though they are always looking for new things, they get into health, looking into new stuff to get streams of money. I mean, he's very mindful into buying back shares, and when I mean you're doing that for probably, as Mr. Buffett has said, the best company in the world, I don't think there's a better way to spend your capital.
Yeah, for sure. And Tim Cook seems to be incredibly dedicated to Apple. Like, I mean, his whole life is Apple. Like he doesn't seem to have much publicly available about his personal life. So, but you can just tell, like, he just lives and breathes Apple. So when you have a manager who's that dedicated, he's just like he's married to Apple, and that's like what he's been all about. So it makes sense that with his strong dedication that Apple continues to flourish.
Yeah, I absolutely agree. And as you just mentioned, how he's so dedicated is one of Mr. Buffett principles. Good company, good management, at a good price. So I guess when he bought Apple, I mean, they had it all. So a little the division of income, as we said before, I mean, still the iPhone is more than half of their sales. I mean, crazy enough. But as we see, I mean, there is services that have been growing pretty amazing from 2020 until 2022. It has up more than 40%. So as we see, I mean, it is a company that depends a lot on the iPhones, but obviously the other parts of the business are growing. And something I'm going to show in one of the next slides, I mean, is what surprised me the most about Apple, and is this is the division per income in the different regions. As we see, Japan was affected, which I didn't know. I mean, I thought China was the country that was the most affected that past year, but it was Japan. America just keeps growing, which is crazy. I mean, it's the biggest market, but still, like, I don't know. I read every annual report, and I'm just surprised how America is just. I mean, if you are not in America, you are just losing your time, I think. Here's the products, and this is what I wanted to mention and say how I got really impressed. Look how the products has been growing, but more than that, look how the margins. I mean, it's just crazy that the margins been growing. I mean, I really haven't seen anything like it this past year, because with all the inflation, all the labor, everybody, like the latest years, I mean, the margins been going down, but Apple, I don't know how they do it. I mean, and again, is I guess part Tim Cook, part, I mean, obviously their brand, and but I mean, it's amazing. It's the only company. I read more than 100 annual reports this year, and this is the only company I can remember that has grown their margins, which is, I mean, it's pretty crazy. It's pretty
Wow.
powerful.
I
So
mean, that's incredible, especially because they are such a big company. Like normally, a huge company like Apple being the biggest one is supposed to slow down, but it's like LeBron James. They don't slow down even though they're so dominant.
yeah, that is a great analogy, and it's just crazy how, I mean, every time I think people keep thinking, oh yeah, it's too late now, but I mean, they just keep exceeding expectations. So this part really blow my mind. So right here is the share buybacks. I wanted to point out how much of that shares they have. I mean, they have spent almost more than around $250 billion in share repurchases. I'm sorry, I forgot that. I mean, I didn't forget, but that it will look too small if. But the most at the right is 2020, 2021, and 2022. So 250 billion. And again, as we have mentioned before, I think this is a smart use of money, just because this is such a good company that a lot of management like to just start playing around and trying to invest in things they many times don't even understand, just to show they are doing the work, but just being humble enough and just investing the way it should be, because obviously a company, it is about progressing the world, but I mean, at the end of the day, it's about the shareholders, which are the owners. So the balance sheet right here, again, another thing that just blows my mind. I mean, how much, I mean, the inventories is 5 billion for a company that is doing $400 billion a year. So I mean, the rotation of their product is absolutely crazy. They also have a vendor non-trade receivables, which is, I mean, product that they give to the people that share the Apple, and they have to pay that, but still it's just so low. So like if you add inventories, account receivable, and vendor non-trade receivable is a little above 60 billion, and with the property, plant, the equipment of only 42 billion. And right here is the other part of that, which they have in accounts payable and other current liabilities. So again, if you add accounts payable and current liabilities, is below what I said before, which is around 60 billion. I mean, and that is crazy, because as I always said, is like they're not only really profitable, they are making money with the money of others. I mean, what else can you ask? And I think all of this was seen by Buffett.
Mhm.
And in the cash flow statement, we can see at the very bottom how they just keep improving the different parts. As you see, In 2020, they had $80 billion of cash generated. This year is 122 billion, and all of this is because they just keep getting bigger their accounts receivable. I'm sorry, their accounts payable, and kind of maintaining their accounts receivable, which again, trying to make money with float, trying to use a lot of Buffett strategies, and not having to get your money stuck around. And obviously, you can just do this with an amazing product and an amazing company.
Yeah, I mean, that's amazing if they're doing that with say the accounts payable, and they're not having to pay out, like they're getting more cash before they have to pay that out, right? In accounts payable.
Yeah, right here. So as you see, like it has grown. Like other current liabilities and accounts payable has grown like more around 20% each item in the last year. So basically, they're keeping the money, which I mean they can use. I mean they don't really need it, but they can even just use it for treasuries, and that generates money, even if it's only 5%, which is
Yeah,
nothing
right.
compared to. I'm sorry.
Yeah, exactly. And that they're, like you said, doing a float like thing, like how Buffett loves the insurance companies because they're able to generate profits on the float. So in a sort of similar but different way, Apple is able to use their kind of float and make way more cash, which is like it shows incredibly why they have a durable competitive advantage, unlike most companies.
Yeah, and it's just crazy. I mean, how fast they rotate their inventory. I mean, it's somewhat like a restaurant. But I mean, with what does Buffett like? I mean, the different talks. I mean, he always loves the brand. I mean, the utility that he has for a person, as we said before. I mean, comparing an airplane or a car to an Apple, just for him. I mean, not really for him, but for the people around him. He they have shown him how much value he has for themselves, and maybe just maybe that's one of the reasons it took him a little long to understand the company, just because, as you know, in 2017 he still had a flip phone. So I mean, when he started using Apple, and then he started seeing and asking, how he always does, kind of like Phil Fisher teachings around about the different products, is when he just clicked in his mind. He loves the value that products bring to consumers. Again, analogy with a car. He sees the company as a consumer product, not a technology company. And that is very important, because all the analysts and all the business writers out there is like, oh, Buffett changed his mind. Or, I mean, and yes and no, because I mean, he did change his mind maybe a little with the airlines, even though he just said that they just had a bet last century, and now with them being just smaller number and people were traveling. I mean, obviously before the pandemic, it was a good value for the money. But I mean, with Apple, I mean, he just keeps learning, and again, that's a life lesson that we do have to take with us. Just, I mean, it's never late to learn, and I mean, that's what life is all about, I believe. And lesson for us, I mean, for me, as we said many times, but it keeps coming to mind, become part of the life of your potential customers. And I think Apple does this, as Disney does, and as many of other consumer products do. The high return on tangible assets with the margin they have is obviously a dream, not easy, but have that in mind when building or searching for a business. Obviously, like, you want to become part of the life of people. I think that example you always use, remember, Michelle, of how, can you expand on that, when you say about how Buffett always says, if you have the McDonald's in town and
Mhm.
the gas station.
Yeah, like I think Charlie Munger said, if you have just a few assets, like let's say you're from a town in Indiana and you own the car dealership, an apartment building, a McDonald's, and maybe one other business, then you've got it made. You don't need to have that many assets as long as you understand what you own and how these businesses work and what their durable competitive advantage is. So yeah, that's similar to Apple. Like you could just own Apple. And then, I mean, not that this is not advice, but for example, it's hard to beat some of the top tech stocks. So if you might own some of those, that's exactly what Charlie Munger said in some of his last advice when he gave an interview to the Wall Street Journal in early November this year. And he said, like, he even said to invest in some of the top tech. So it's no wonder that, Apple continues to be one of the top tech that a lot of us should consider for our portfolios if we can get in at a good price.
Yeah, what you just said there is the difficult part because a lot of people now understand the value of this amazing company. And yeah, and the last thing that I wanted to say is buy commodities and sell brands. And as you know, I mean that's what drives Buffett in many ways. In Coca-Cola, you buy sugar and the syrup, and you sell something combined, and you sell a brand. And again, Apple does the same. They buy parts of phones or parts of, and they sell a brand, and that's something it has to keep in our minds, especially for little entrepreneurs and everything. Just because competing in price when you don't have the scale, I mean, you're gonna get killed in the long run. A lot of times I don't know, you start a little coffee shop and I'm gonna sell cheaper than the guy next to me, and yeah, for a time you get customers, but at the end of the day the cost don't give you the results you want, because that's not how you compete when you are small. You have to create a brand. You have to get into the mind of your customers, and it's something I guess we repeat often, but I think Charlie Munger used to say that repetition is what makes stuff stick in your mind and really get you to learn. So this is a great message. Buy commodities and sell brands.
Mhm. Yeah, and
Yeah.
another lesson that sticks out to me from Buffett is how often he's written in the past few years in the Berkshire Hathaway annual letters about how their ownership of Apple keeps getting bigger, not because they're buying that much more themselves, but because Apple keeps doing the share buyback. So he raves about how, that's amazing. Like they own more of the apple pie. And, it's kind of funny. Like I just made a little joke there, but like it's true how Buffett is very impressed with how Tim Cook is allocating capital. So for sure, everything you said, and it makes you also remember, like, if Apple keeps impressing Buffett, it's like we should think about that seriously, because, like, can we find a much better investment than Apple? Like given Buffett's skill, he's kind of done half of the homework for us. So it's something to think about. And like, I only own a little bit of Apple, but I wish I owned more, to be honest.
Yeah, absolutely. I mean, I don't. There's not much things that you can criticize about the company except for the price at where it's at. Where another lesson that he has teach a lot to us as investors, and he always talks about is like, I rather obviously Apple go down so I can buy more,
Hmm. Yeah. Well,
because
yeah, and that might seem counterintuitive at first, because you're thinking, like, most people, when they look at their portfolios, they want to see it just go up. Like they don't want it to go down, but you need it sometimes to go down so you can buy more of it. Just like, I relate to your friends when they buy the meat on sale. Like when I see certain things on sale at the grocery store, I get excited because I know what the normal value is of, say, coconut milk, and then I buy the coconut milk for only $1 a can instead of the normal price of $2.50 a can. So you want the price of, certain important products to go down, and then you buy a lot, like just like you would do with stocks if it's, a very valuable type of company.
no, absolutely. I mean, that part of the meet with my friend is very interesting, because I mean he does. I mean, it's very simple. I mean, they eat a lot of meat. So let's say I think he told me once they spend like $100 in meat per week. But then he goes the day which I think is Wednesday, and is 40% off. So 100 minus 40% is $60. So instead of paying 400 a month, he's paying 240. Now multiply that by 12, is $720 a year. And now multiply that per 10 years, $7,200. And just because you are being organized in the day you go to the grocery store, it's not like I'm asking you to do nothing out of the common. I mean, you're gonna go anyway, so why not go when it's smart to go?
Exactly. Yeah. So the same smarts that we might use when we get grocery shopping deals, we should do the same when it comes to stocks if we know what the value really is.
Yeah, absolutely. And as Buffett always says, we are gonna keep buying groceries until the day we die. So it
So,
is
yeah.
the way to go. Just
Yeah. So I mean, yeah, I mean, with that, I mean, we might be having a Santa rally coming up, and perhaps people will be stuffing their stockings with stocks. Maybe I don't know. So I I'll probably post this video next week, a little after Christmas. But I hope everybody has a wonderful Christmas and Happy New Year, and I hope that 2024 will be a good year to us as investors. So thank you so much, Alejandro, for doing this video with me today.
thank you so much, and as you said, Merry Christmas to everybody and Happy New Year.
Thank you, Alejandro. Take care.
Bye.
Bye.